So you may have seen or heard someone referring to the stock market's acting crazy. What they're likely really referring to are the valuations of today's markets. We're going to unpack what that means and why it's so important this week. So this week we're going to talk about valuation. We're going to talk about it for two big reasons. One, it gets written about, spoken about frequently, but really incompletely. Secondly, is we're headed into earnings season. So there's going to be a lot of talk about earnings, the market valuation, do they line up? What does it mean for 2021, if not in the next couple months? And so I want to help create a framework that hopefully makes those conversations a lot more useful. So number one, what is valuation? So when people are talking about valuation, there's a lot of different metrics they can use, but the most common one is a price to earnings ratio. If you look at the total price, if you added up all the shares, you're going to buy all of Apple, what does that cost, right? About $1 trillion these days, maybe a little bit more. You take all their earnings, you divide that number by their earnings, and that tells you how much for $1 of earnings you're having to pay. It could be 15 times $1 of earnings, 20 times $1 of earnings. That's what a PE multiple is. That's what valuations they're looking at. They use historical average to determine things trading at a little bit more of an expensive level, or are they trading at a cheaper level. What moves price to earnings? It's not static. Every stock or asset class doesn't get the same price to earnings multiple, and they don't get the same one all the time. Really is a function of two things. Number one, expectations. So do we expect earnings growth to accelerate, keep on a rapid pace, moderate, fall off a cliff? Those expectations are going to drive how big of a multiple people are willing to give you. So if you think of a boring cereal company that's selling about the same amount of cereal, they have a very low multiple. No one's expecting a lot of growth, right? If you think of Apple, who's launching a new product every few years and accelerating their growth, people are willing to pay a higher multiple for that because they believe, again, in time, it's going to look cheap from the growth over the years. The second big way valuations get moved around is just emotion, okay? When people get really fearful, it's that baby with the bathwater phenomenon. They just sell everything. So even companies that maybe earnings are holding up, companies whose earnings will bounce back quickly, everything gets sold down to a very low multiple, and it's done. Think the end of the 2008 era, right? Good companies, bad companies, everyone had pretty much been decimated and was trading cheaply. Then people start picking through the pile, realizing, hey, there's some value to be had here. Things can change. Conversely, things can get very expensive. You think of 2001, emotionally, things were riding high, right? Greed took over, that other emotion, and that can push multiples to a place that, again, in either one of those cases, don't make sense. All of which is to say, valuation alone is not going to tell you a whole lot about how a market's going to act, especially over a short period of time. So point number two, why is valuation important? Well, valuation is important because it really is a fuel to market that can either shoot it into the stratosphere or burn it to the ground. So if you think again of gasoline, that's the best metaphor I really have for valuation. It's just sitting in a tank with no spark, that rocket ship goes nowhere. You may have gasoline dripping over an object that isn't necessarily going to catch on fire and burn down, again, in either case, without a spark. And so while valuation is important to know, if it's a low valuation, is this fuel that could propel me? Or if it's a high valuation, is this fuel that could burn me to the ground? Why it's not important, and what people forget to take a look for, is what is the catalyst? What is the spark that's going to bring the market and people's attention to what type of a value they have in current markets? Which leads me to my last point. Where are we today? Well, currently the S&P 500, the index that at least everybody loves to focus on, is trading around 24 to 25 times the forward-looking 12-month earnings. So markets tend to try to be projecting. Historically, that number's been around 16 times earnings. So this is one of the more expensive markets we've ever seen, which undoubtedly puts us in that latter camp of probably a dangerous type of a fuel, a market that's is likely to burn down, I won't say to the ground, it's not going to zero, but face some serious headwinds and threats, as opposed to something that has a very low valuation that with the right spark could send it even higher. So that's when people are talking about, hey, the market's being crazy. They're really looking at these valuations and saying, how do we justify these, particularly with the amount of unknowns we have? Which brings us to point number 3. What are the catalysts we need to be looking forward, good, bad, or otherwise right now? Well, they really come in 3 forms. Number 1 is stimulus. We're running out of all the PPP loans and the employment paychecks. Stop July, end of July. Congress, the president, talking about another $1 to $2 trillion worth of stimulus. How and when that happens and in what magnitude the market is going to be watching for, much as it was a catalyst in March. It could be a catalyst again. Don't think it'll propel markets a whole lot more, but now it's baked in as something that really would need to sustain the market where it's at. Leg number 2 of this stool is earnings. So we're headed into earnings season. A lot of people pulled guidance. We know the economy got hit. We know we have massive unemployment. So many companies are shut down. But companies pulled guidance. They didn't give any type of projections. Now they've got a report. So this is the time where we're going to understand both A, how bad it was, and B, are some of the relatively rosy projections about how quickly things could get back to where they were pre-COVID in terms of earnings, realistic or not. So that's something you're going to be wanting to watch for. Finally, leg number 3, COVID counts. However people have wanted to spin in the past, there's no questioning they're re-accelerating in terms of the cases. Lockdowns may be off the table, but even impediments to consumer behavior, travel, etc., are going to have headwinds and were really things that the market had started to look past. You bring those back into focus, that again could be a big threat. That could be the spark that pushes things to focus on the high valuations of the market. But similarly, some very interesting reports with respect to testing, possible vaccines, medical breakthroughs. I know that community is working so hard. And in some cases, again, we're hearing through the grapevine, if you will, getting close to some things that if that comes out, are game changers. And so we don't want to be running from this house that might have gasoline on it. We don't necessarily want to be prepping our rocket ship. We want to stay balanced. And so these are my big 2 takeaways. Number 1 is understand the complexity of situations. You'll read articles. You'll find a data point. The market's trading at 25 times earnings. No singular data point is the key to unlocking the future or understanding what you should be doing with your portfolio. There are so many variables, and hopefully some of today's put those into context. The second big thing is find that anchor. You don't always know whether you're in the house dripping in gasoline or in the rocket ship about ready to take off, but you need to find that anchor, whether that's your plan, whether that's your goal, whether that's a partner. What is that thing? What is that thing that kept you invested in March? What is that thing that's keeping you from chasing silly stocks, trading at ridiculous levels right now with no earnings, or cryptos, or whatever the case may be? What are those anchors that keep you grounded? Who are those people that keep you grounded? If you have them, focus on those. If you don't, find them. Either way, we're here to help. And as always, thank you for your time and attention.